let's go ahead and jump in. I can already tell that this will be a longer video, and the reason for that is because, I certainly have a lot of different thoughts about the current situation in the market and how it relates, how Bitcoin relates to the Ether Bitcoin pair and how that relates to Bitcoin dominance and how all of it relates to alt Bitcoin valuations and how that relates to, say, like the stock market and the Macroverse. There's so many things to think about. And it's really complicated, to try to put it all together into a cohesive argument that makes sense, that you can stand back and say, all right, these are the most likely outcomes for the next few months, and let's see how it unfolds. One of the reasons why I think there's so much tension in the cryptoverse right now is because there's two very different competing views on the market. There's one side of things that simply suggests that Bitcoin price action follows the halving cycles. By the way, it's halving, it's not happening. And the second of which implies that Bitcoin price action more closely follows sort of macro business cycles, right? Going from quantitative easing to quantitative tightening. And really up until this point, they've all seemed to align. And there's actually still a chance that they could align this cycle. It really depends on how the next few months play out. So what I want to do in this video is just go through a couple of different scenarios. I don't really think we need to go through too many, but to go through a couple of different scenarios. Now, before we get too much further, I will say I cannot predict the short-term price action. Like, I don't know what's going to happen. I've said before, a lot of times in the short term, it's more or less a random walk, and it's next to impossible to predict. And in a video such as this one, to express sort of both sides of the views, it's going to make people uncomfortable, right? Because the bullish view would make people concerned about sort of the macro side of things uncomfortable, but the bearish view would make people that are more concerned about just sort of Bitcoin repeating what it's always done a little bit more uncomfortable. So what I'm going to do is I'm going to show you how both sides can come up with evidence to support their view. And I'll talk about my views as well, but that's what I would like to do in the video. The first thing to sort of acknowledge here is that Bitcoin has had a pretty sharp sell-off following the spot ETF. Okay, so we had the spot ETF launch. Bitcoin rallied all the way up to about 49K or so, and since then it's had a pretty sharp drop. But in the grand scheme of things, the drop at this point is not that dissimilar from what we've previously seen. In fact, if you were to take a price range here, you can see that we've dropped about 21%. Interestingly enough, these prior drops were also about 20, 21%, 22%, in that ballpark, right? So at this point, I don't really think anyone can say that this drop has been out of the ordinary, right? I think that'd be a fair assessment to say, look, guys, this is still within the realm of what we've seen this cycle, and to suggest otherwise would be somewhat premature. We know, too, that after Bitcoin has dropped below the 50-day moving average on more than one occasion, you'll see that it tends to drop another 14, 15% after going below that 50-day SMA. Right? 14, 15% drop. Here, so far, it's dropped about 10 to 11%. So, yeah, like in that regard, it would lead you to believe that it certainly could drop further, especially considering that it has not yet reached the bull market support band. Okay? But again, there's no guarantee that we test it. And if we do test it, it could still be several months away, right? Like it might not be this week. It certainly could be. But even in prior cases, it took a while to sort of slowly bleed back down to it. And in this case over here, we just had a single wick down to it, and then that was it, and we were right back up, right? Really like the following day. But that is certainly something that I think is worth keeping in mind, is that, look, there's no guarantee that we go down to it immediately, and even if we do, we could get a sharp bounce off of it. And that's why I've said before, the reaction is going to be very, very important, okay? And one way to maybe illustrate that is to look at the market like this. There's been a couple of times where we sort of dipped below the bull market support band, like right here in mid 2021. We then got back above it, came back down to retest it, and then got another push up. Kind of a similar thing here, right? We were below it, we got above it, we came back down to test that bull market support band, just a wick, kind of like that one there, and then we got a final push up. So you can see this pattern has emerged a couple of times. And so, looking at the market today, we have this move here where we've gone below it. And clearly, this is a significant level, right? Like 48, 49K is a significant level. That doesn't mean that we can't take it out. But what I'm saying is that I think at the very least, it's similar to a move like this, where it does mark at least a local high for a some time, right? Where it's going to take more than just a day or two to get back above it. And so this is why I say, looking here and here, the reaction around this zone, I think, is going to be incredibly important. Does it get something like this where it then pops up to take out this high? Now, I mentioned that you can find evidence to support either view, right? Because on one hand, looking at these patterns right here would certainly be evidence to support that view. You could also look at competing evidence on, say, Bitcoin USD back in 2019 and see that these long wicks over here, this long wick that occurred in June, was never overtaken, right? So there's no guarantee that we can even take out that prior high, even if we do get a bounce. In fact, in 2019, when the bounce finally came, it just kept being sort of shorter and shorter wicks. Look at monthly candles for Bitcoin USD back then, right? So going and looking at 2019. You see those monthly candles, right? We had one long wick and then they just kept getting further and further down after that. So I certainly am not suggesting that there's any guarantee that we can take out that high. What I am pointing out simply is that there's two different patterns that we've seen, one of which we saw Bitcoin top out just like here, and then it didn't go any further. But if you look at 2019, you will see that we put in this high here on some type of major product launched to the cryptoverse. And then following that, we actually did sweep that high eventually, right? So there's no guarantee that something like that can't happen again. I've clearly noticed that the market has very much been, chasing one narrative to another. Whether it's the spot ETF, whether it was the merge. It seems like right after the Bitcoin ETF launched, people started to immediately shift gears to the Ethereum ETF, which, I don't know if it's going to be approved or not, but it certainly seems like we're just sort of chasing one narrative after another. And the two most compelling narratives for the first half of the year are the Bitcoin halving and potentially an ETH spot ETF, right? Potentially. But that's no guarantee, right? I said before, I think it's much more likely that the Bitcoin one gets approved over Ethereum, because I think it's a little bit more clear that Bitcoin is a commodity. Whereas while I think it would be nice if Ethereum, Ether would just be declared a commodity, I don't know if it's going to be that simple. I mean, they might push back on that for some time, and therefore an Ethereum ETF might not be approved for, a lot longer than people are initially hoping for. Okay. So I think it's fair to say that we could envision both potential outcomes here, right? One outcome being where you get some type of bounce off the bull market support band. And then the question is, does it take out this high or does it not? Okay, so again, over here, we took it out. Even over here, we took it out. Over here, we did not. And so there's there's nothing I can point to say definitively what's going to happen, because you're going to be able to find evidence to suggest the contrary. One of the things that I think is interesting is how all of this relates to the dominance of Bitcoin. And I know a lot of people give me crap for it, and that's okay. But what I will say is that, the views on dominance have been, I think they've been in line with what we've discussed. I mean, we never suggested that it would go up in a straight line. It's a long and grueling process where altcoins basically just get shaken out. They get rinsed on their Bitcoin valuations. And, for the entire time, people keep thinking that they're holding up well on their Bitcoin valuations. How many times this year has someone told you that, that Ether Bitcoin is holding up well, right? Over the last, basically since the merge. How many times has someone said that? Oh, well, Ether's holding up well. Okay, fine. But it still just kept putting in lower highs, right? Like the trend hasn't necessarily changed. And so I think that's important to acknowledge that, yes, like it's holding up better than it did last cycle, but who's to say that this pattern that has emerged by Ether Bitcoin isn't the same pattern that's playing out this cycle? Namely, where you put in a low after putting in sort of this double peak pattern, right? You put in a low, and then after that, you keep testing that low until eventually it breaks, right? Eventually. And sometimes it's taken longer than other times to break. But this is what we're looking at, right? And so when I look at a chart like this, I say, well, how does it break down? Does it have to? It doesn't have to, right? It doesn't have to break down. But how would it break down? How would it? One thing to remember, and I've been clear about this for a long time, is that Ether Bitcoin has historically broken down on Bitcoin rallies, okay? Now, that doesn't mean that it has to break down in a Bitcoin rally. There are times in sort of the intermediate parts of the trend where it's breaking down on a Bitcoin dump. And in fact, right here, you will see there was a phase at nearly the same valuation that it is today where Bitcoin dumped and Ether Bitcoin lost this support level, right? You can see pretty clearly. Bitcoin dumped and then Ether Bitcoin lost support and it came down. So I'm not suggesting that it has to lose support on a rally, but if you look at the two other examples where Ether Bitcoin lost support, right here and right here, they occurred on Bitcoin rallies, right? Now, you might notice actually that when it lost support here, it was actually on a rally to a slightly lower high. The high on Bitcoin USD came the week of June 24th, but Ether Bitcoin did not lose support until the week of July 8th, I believe. I think a lot of people maybe overlook that, but you can pretty clearly see, we know that this peak here was the actual high when you look at the wicks, but Ether Bitcoin didn't break down until the week of July 8th, after Bitcoin USD had already put in its high. It was about 2 weeks later, okay? So that's something I think that it's important to sort of remember. I think that when you think about where Bitcoin is right now, there's certainly elements of this business cycle that have been interesting, to say the least, compared to prior business cycles. One thing to suggest, and I'm trying to provide evidence for both sides so that neither side feels like they got shafted in some way, right? One thing to consider about where Bitcoin is now compared to 2019 is that if you were to overlay the NASDAQ, it was actually when the NASDAQ put in a new, when it was putting in new highs. That is actually where Bitcoin topped out, right around the time that the NASDAQ was putting in new highs. If you overlay that, you can see that the NASDAQ had sort of a fake breakout and then it broke out. And you kind of have to look over here and sort of see the same thing, right? Like the NASDAQ had this same sort of false breakout, but then Bitcoin topped after that on, say, the actual breakout by the NASDAQ, which, by the way, I mean, it still actually came back below the prior highs to put in a higher low, but it was the second breakout to new highs by the NASDAQ that sort of led Bitcoin to the downside. And I wonder if the reason for that is because the market's just constantly chasing new narratives, right? For a long time, the market's chasing the spot ETF, and then the market changes and says, oh, well, let's stop talking about the spot ETF. Let's now chase the NASDAQ and tech stocks and the AI narrative, right? So I do think there's a lot of elements of that where people are just sort of chasing one narrative to another, whether it's, Bitcoin, spot ETF, whether it could turn into the Bitcoin halving, whether it's AI, whatever it might be. It just seems like we're chasing one narrative to another. My concern for Bitcoin is really what happens if and when the narrative changes from no longer thinking about the halving and the spot ETF or Ethereum and all that stuff. What happens when it's June, May or June, and we're in the dog days of summer and all these narratives that people have been chasing forever, there's not really another great narrative to chase. And then the economy is starting to slow down in line with historical timeframes that it has taken the economy to slow down after yield curve inversion. So that is, that's something that I just constantly go back to of when is that going to be the narrative that takes hold? The one thing to consider with Bitcoin as it relates to Ethereum is that if Bitcoin were to bounce off the bull market support band, it would likely take ETH with it, okay? But the key thing to watch is if that happens, Bitcoin dominance should go up. Do you guys remember a few months ago where dominance got washed out for like 2 months straight, which is essentially what just happened? And then following that, we just started a slow dominance uptrend for a while. If you see something like that play out, where either dominance just keeps going up or whether it goes up, maybe gets rejected and then goes up again, if this starts playing out again, then I think we need to be aware that it could be playing out like the last cycle. Now, you might not know what I mean. Well, if you look at the last cycle with dominance, one of the things you'll note, and I've pointed this out many, many times, is that Bitcoin stayed risk on until we achieved dominance of retracement, a fib retracement to the 0.5. Okay, so to overlay Bitcoin USD could be helpful. So here you can see that Bitcoin topped right there the week of June 24th. And that is precisely when Bitcoin dominance retraced to the 0.5 retracement level, to that level. The 0.5 retracement for Bitcoin dominance this time is not 65% like it was last time. The 0.5 retracement is 56%. 56%. So, I don't know how it's going to play out, but if it did play out, it means Bitcoin continues to wash out these altcoins on sporadic Bitcoin rallies until we hit 56% dominance. Now, that doesn't mean that the rally has to go to new highs. or local highs. Like it doesn't mean that it has to go to 50K or the low 50s, but it could if it were to play out like it did last cycle. So, you know, when we look at this chart, 56% dominance, that I think is the level where Ether Bitcoin durably breaks support on the weekly time frame at 56% dominance. So if sometime over the next half year we're looking at the dominance chart and it says 56%, then that would imply to me that Ether Bitcoin has durably broken down. And what I mean by durably breaking down is I mean a weekly close below 0.049, a weekly close below it. We have not yet had a weekly close below it. And I've said before, it's important to get a weekly close below that level. So why do we care so much about this? Well, remember, the issue for Ethereum is not whether Bitcoin goes up, right? The issue for Ethereum is if Bitcoin goes up more aggressively than ETH. Because if Ether breaks down against Bitcoin, history would suggest that sometime after that, a large correction could occur. We could already be in one, right? We could already be in it. The correction could already be here, and everyone's maybe hoping for a bounce that never comes. But when you look at Ether USD, what do you notice about it? What do we notice about when Ethereum finally took the plunge to the lower regression band? As always, it was after Ether Bitcoin broke down. Not before, it was after. So if you look closely here, you'll see that right here, after Ether Bitcoin broke down, that's where Ether USD took the plunge. Last cycle, when Ether Bitcoin broke down, right here in June of 2019, that's where Ether USD took the plunge to the lower regression band. And so, right, what we're looking at here is, well, we're flirting with it, right? I mean, like it looks kind of similar. You know, you have your initial low, you got your initial low, and then you sort of flirt around these levels for a while, but eventually, I'm afraid it will break. And if and when it breaks, is that when Ethereum gets that larger correction? It could be a severe correction, not just a 20 to 30% correction. In fact, historical moves back down to the lower part of the regression band have been about a 70% drop. This was a 70% drop. This over here was about a 70% drop, not including the recession pandemic, not including the black swan. I think some people say, well, you know, it was a black swan. It already had a 70% correction before that. Like, I mean, just assume that this doesn't even exist on the chart. We still saw Ethereum drop to the lower part of the regression band after Ether Bitcoin broke down. And Ether Bitcoin broke down on a Bitcoin rally. So where is Ethereum today? Well, I mean, a 70% correction from the current prices would basically put it at the lower part of the regression band. Now, that doesn't imply necessarily that this is where Ethereum has to correct from. It certainly could be the case. You might say, well, isn't that a cheap way out? For me, it's not, because for me, all I really care about is the Ether Bitcoin pair as it relates to Ethereum. Because I think Ethereum breaks down against Bitcoin, I don't have much interest in Ethereum. I can acknowledge that it's possible for Ethereum to go higher on its USD pair, but I would also say the only way it does that is if Bitcoin gets an aggressive bounce off of, say, like the bull market support band or the 100-week SMA. That's the only way, in my mind, which could be flawed, but that's the only way that I would see Ethereum getting another push higher, would be that if Bitcoin gets that push back up first. So, yes, like it's possible that Ether could go higher. There's actually some similarities, right, between this low here and then this low here, right? This is about a 10x move, right? Because this low here was about, you know, in the 80s. This low here was in the 800s. This high here, the weekly close, was about 300. And then it had a wick a few $100s higher than that. And so, you know, we haven't hit 3K on ETH. There's no guarantee that we do, right? But what I can say is that if it's going to happen, it's probably going to happen in the next couple of months, right? Because, I mean, you can see there was a pretty big correction over here by ETH. It dropped about 14% in a week, and then it got that final move up, and then it broke down. But here's the thing. I don't know if this move is going to occur. Frankly, I don't care. And I've been clear for years that my crypto portfolio is just Bitcoin heavy because I basically expect almost everything else to break down against it over time. Until we get back, you said it, to looser monetary policy. So what I'm looking for to get interested in Ethereum is, first, I would need to see Ether break down against Bitcoin, which my guess is it's still a few months away from doing that. I would not mind it breaking down sooner. I wouldn't mind it at all. But there's a lot of history that shows that, when we do get bounces by ETH, Bitcoin, it takes a while to get back down to those lows, right? People don't just give up on it that easily. They'll fight. And with the spot ETF stuff for ETH, they'll fight a long time until it's just like the consumer. The consumer will spend until they literally just cannot spend anymore. So people will fight as hard as they can to keep this ratio up. But in the end, I still think it will fall. It might not fall until March or May or June, right? I don't know. Here it fell in the month of July, but it tested it. You can see that it tested it in September and in December and in May, and then it finally fell in July. We said going into January that if we don't get a weekly close below this level early on in January, then it's likely to get a bounce. And the reason for that is because January does tend to offer favorable seasonality for Ethereum, right? It does. And so, yes, the same thing played out just like it usually does, right? Basically the same thing played out. So when I look at Bitcoin, and I think is this the top for a while? Is this sort of the mid-cycle top, if you want to call it that? It's possible, but I will say if it is the mid-cycle top, I have a feeling the market will give it another go just to see if it is, right? Just to make sure. So the market participants might say, well, there's the halving, and they're going to see one last time if that's the top, or if they can take that out. In 2019, they were not able to take it out. In 2021, they took out that long wick, right? Here they did not. Here they did. Here it went about 6% above. 6% above that wick would put you at around 52K or so. So it's a dilemma, right? It's sort of a dilemma of, well, is that move going to come or not? There's another way to sort of visualize this stuff, and I want to continue to provide evidence on sort of both sides of the argument. And the reason I do it, the reason I provide evidence for both sides, is so that people can invest accordingly, right? So that people can say, all right, we've seen the arguments, and based on the risk, this is how you want your portfolio to be, right? Sort of an acknowledgement that we can't know the future, but there's a certain risk that we go up. There's a certain risk that we experience a terrible crash. And how do you hedge against that sort of stuff, right? Well, for me, the way I've done it, as I've said, is just I've kept my crypto portfolio Bitcoin heavy, but I've also got some cash on the sidelines in case there is a larger drop. I'm not going to apologize for that. That's what makes sense for me. One of the things I think to look at is, at this point, we are still following historical norms. The year-to-date ROI of Bitcoin in 2024 is actually still mimicking 2016, right? Is it not? It's still mimicking 2016. And you can see that in 2016, after about, the fourth month or so, Bitcoin had another large move to the upside. If Bitcoin were to get another large move to the upside, like it did in 2016, then I think this would probably be enough to break Ether down against Bitcoin if it has not already broken down against Bitcoin. So this is an important chart to look at. You can see that in 2020, we had a much larger drop. In 2012, we also had a drop. In all three cases prior to this cycle, we had a drop in Q1 of the halving year, in all three. And that's why I said going into the halving year that you should be prepared for that. Right? We had the drop here. We had it right here. And we also had it right here. And now it looks like we've more or less had it again. It's a very common pattern for Bitcoin to get this drop to the bull market support band. But as I said, so far, it's not different from these corrections that we've already seen, right? It's not that different. And we need to see the reaction at the bull market support band. One thing that has not yet happened that I still think needs to happen is that alts need to break down against Bitcoin. Total 3 minus USDT divided by Bitcoin has not yet broken down. You can see that last cycle, it took a while for it to break down. In fact, from when it set this first low right here, it didn't durably break down for about 41 weeks. 41 weeks after this low right there puts you in April, which coincidentally is the month of the halving, which, by the way, is coincidentally the month before the first rate cut, if it doesn't come in March. Right now, market thinks first rate cut comes in May. So think about it. It seems to be aligning to some degree. You have altcoins still have not yet broken down against Bitcoin. We know that last cycle they broke down in June of 2019, which was 1 month before the first rate cut. Right? It was 1 month before the first rate cut. 1 month before this first rate cut potentially could be April, which, by the way, is the halving month. Which, by the way, is where we've historically seen another move by Bitcoin if it already hasn't had some type of massive capitulation like we got in March of 2020. So I still think alts need to break down against Bitcoin. But they haven't broken down yet. Right? They haven't. But I think that is something that will happen in the first half of this year. I think alt Bitcoin pairs will drop. We need to see total 3 minus USDT divided by Bitcoin go below 40% and get weekly closes below 40%. Just like I think Ether Bitcoin needs to drop below 0.049 and get weekly closes below that, right? If you were to look at some of the other altcoins, ADA is a good example. ADA Bitcoin had a big local top right there, which I think kind of is similar to that one, right? You can kind of see similar moves here. But you can see that after it had that move, it just faded back down, and eventually it finally broke that low in June of 2019, 1 month before the first rate cut. Again, first rate cut potentially coming in May, maybe March. It'd be interesting if it came in March, because then everything gets fast forwarded potentially to now, right? But I think it's still going to break down. So what if that is ultimately what happens? That, Bitcoin continues to chop around for, let's call it 3 more months. And during that time, alts break down against Bitcoin. You can see over here, after Bitcoin put in this local high in June, we didn't even break down until September. July, August, September. It was 3 months. 3 months of chopping around before Bitcoin finally broke below the bull market support band. 3 months. 3 months from here, guess where that puts you? It puts you in April. That would be 3 months from now. Also, if we do put in a new local high, or we sweep the high, kind of like we did over here, if we do something like that, history shows it would probably happen in March or April, right? In potentially March or April, maybe May at the latest. But I still think this market has been very uncanny in terms of rallying into narratives, whether it was the merge, the spot ETF, everything you can think of. It's basically just done something like that. But I think later this year, the narratives are going to change from all of that stuff that people are worried about right now to, oh crap, how much damage did the Federal Reserve do? And when that happens, that's when I think Ethereum finally gets that larger drop. If you look, you can see last cycle, it actually played out in a very similar manner with Ether. You had a low, a higher low, a higher low, and on the fourth attempt, it finally broke. And that was where that larger drop came. Note that on the fourth attempt, it broke after Ether Bitcoin broke. So what that would imply is that Ether Bitcoin will break down first, and then after Ether Bitcoin breaks down, Ether USD will probably lose this trend line. Potentially, sometime in the next few months or so, right? This is if it were to play out in a similar way. So what I'm suggesting is that sometime in the next few months, Ether Bitcoin breaks down. After Ether Bitcoin breaks down, Ether USD breaks down. One of the things about Ether USD that you might notice is that it doesn't tend to just put in a low and then never test the integrity of that low. Look at all the prior examples. Right? You have a low, you test the integrity of it. You have this low here, you test the integrity of it. Same thing. Same thing again. So at some point, I think Ethereum will test the integrity of that low, back down below $1,000. But history would also suggest that it won't test it until after Ether Bitcoin breaks down. And history also suggests that Ether Bitcoin probably won't break down in January, because normally January is a good month for Ethereum. And it could still take some time, given these narratives that are floating around, given the spot ETF for ETH, given the halving narratives, right? It could take some time for that to play out. But imagine Ether USD or Ether Bitcoin just, sort of stays in this range and then eventually breaks down. That, when it breaks down, assuming that it does, that I think is when Ether USD will break down. Right? Something like that. Which would take it, as we've said before, to the lower regression band. The issue is I don't know what type of shenanigans are going to go on between now and May, right? Like I don't know if this move is already over and it's just going to sort of slowly bleed here and then go back down, or if it'll get one more push higher like it did over here. Because what you might notice is that this move by Ether over here, that initial move got it to 270. That's interesting, isn't it? Because this move right here got it to 2,700. But look, the only way Ether gets this move here, right? The only way in my mind that it gets that move is if Bitcoin gets a move back up. And I don't think Bitcoin's going to get that move back up until, I think we still need to have some time go by. We do have the FOMC the last day of the month, so about a week from, a little over a week from when I'm recording this video. I don't know exactly when I'm going to get this video out, but probably in the next day or two. But January 31st. So, if Bitcoin's going to get a bounce to test whether that's the high or not, that's when it's probably going to happen, right? Sometime February or March timeframe. And the hard part is I don't know if it's going to take out the high or not. In 2019 it did. In 2019 it did not, but in 2021 it did. There's other ways that we can look at this, and one of them is actually USDT dominance. You're like, oh, well, that's coming out of left field. But take a look at USDT dominance. There's actually a somewhat interesting trend here on USDT dominance, where essentially what has happened is that every time it tags this trend line, it is marked a significant level, a significant top. Look at these trend line. Look at the trend line where it tagged it, June 2019. You guys know what happened in June 2019. That marked the top for Bitcoin right here, June 2019. You remember what happened in February 2020 when we tagged this trend line? February 2020 is right before Bitcoin collapsed. What happened in May of 2021, right? When we were tagging this trend line. We were tagging it in March, April, and May. That was when Bitcoin was putting in all these highs right here. We were tagging that trend line the entire time. And then look at it again. November of 2021, we tagged the trend line. And you guys know what happened in November. That marked that top. And so that's the question is USDT dominance going to get rejected here and come back down for one last move? I mean, in September, it was at 8.5% dominance. Now it's at 6.5% dominance. The trend line is at about 4% dominance. So if USDT dominance were to go down to 4%, that would probably be a huge warning signal to the market, a huge warning signal at 4% dominance for USDT. Because anytime it's gotten that low, you then get a rotation out of crypto or out of risk assets into the stable coins. And you get a massive crash in crypto when that happens. So I'm not saying that crypto can't go down. There's been plenty of times throughout this entire phase over here where Bitcoin had drops. We also know that Bitcoin has had significant drops, you know, at other times, right? Like it's not like it had to be at a peak for it to have a significant drop. I mean, you know, when it was here in April of 2022, it was just before it had a significant drop, but it wasn't on the trend line. So what I'm saying is, if it comes down here, right? Like if Bitcoin were to get a pop up after hitting the bull market support band, and if USDT dominance were to go back down to the bottom of the trend line, then to me, it would suggest that there's a crash that's about to ensue. As we've always had crashes after we hit this trend line. Now you might say, why does it have to play out like this? Why does it? It doesn't. We don't have to have a crash, right? Like nothing has to happen. It's just that Ethereum tends to drop after the Ethereum Bitcoin valuation breaks down. That's what tends to happen. And that just hasn't happened yet because people have been so stubborn and they just keep, you know, going full degen into the altcoin market. But history shows us that dominance does not likely top until after rate cuts arrive. Right? Dominance did not top here until after rate cuts arrived. So why do I assume it has to be different? What if this time's not different? What if dominance does not top until after rate cuts arrive? Let's suppose the first rate cut's in March. You can see here we had a first rate cut in July, and then dominance tops 2 months after that, right? So if the first rate, let's say the first rate cut's in May, so then June, July. So then July would potentially be 2 months after the first rate cut. But I still think that there's a case to be made that dominance is potentially sort of in this range right here. And we're going to get a large move to the upside relatively soon. Now, there actually is one chart I could look at that is a little bit scarier than looking at it like this. I mean, if you look at it like this, it looks like everything's fine and there's nothing to be concerned about, which could be the case. At this point, we haven't had that big of a drop. There's other ways to look at it, which would suggest it could get a little bit more challenging. You know, if you look at like the running 1 year ROI, you can see that it's been dropping a lot recently, and after it sort of hit these levels in the past, we've had pretty big drops. In fact, once it hit this level last cycle in February 2020, that's what happened just before the crash. Another way to look at it is to look at the ROI from the peak for Bitcoin. Sorry, that's the wrong one. And if you just look at this cycle compared to last cycle, this is actually, look at the green line, that's this cycle, the orange line is the last cycle. Right around now is where that big drop occurred, right? So it's this market, I feel like it's constantly keeping you on your toes. And you can see how there's so much evidence to support either view, right? Like we could look at different pieces of evidence. Now you may say, well, you know, is there any guarantee that the market or the economy has to slow down? There's no guarantee of anything, okay? But I will say, you know, to ignore it might not be the wisest idea. If you look at the yield curve, it is still inverted. It is still inverted. If you look at treasury yield spreads, the 3-month and the 10-year, the spread on this is, you know, I mean, it's still very much inverted. And at some point, I imagine it will become uninverted this year. Look at the 2-year and the 10-year spread. It's almost at uninversion already. It's getting pretty close. Normally that signals weakness if and when that happens. Hasn't happened yet, but it's getting pretty close. If you were to look at, say, like the 10-year treasury yield, it's moving back up, but I wonder if it's just going to get rejected up here. If you were to take a look at the 2-year minus the 10-year, you may notice that it just got rejected off the bull market support band, which a lot of times when that has occurred during yield curve inversion happens just before the uninversion process starts and as rate cuts arrive. This is 2000. This is the dot-com crash. This is the financial crisis. But it could also be something not as bad where it, you know, maybe we just sort of come back down to this level and it doesn't go all the way back down, you know, to the lows. I do think there will be rate cuts this year, right? I do. But there's certainly a lot of different things to suggest that the economy is slowing down. And I know the labor market has been relatively tight. If you were to look at initial claims, still relatively low. I mean, 187K, that's not really recessionary territory. You would expect it to be somewhere in the 300 range. With that said, I mean, there's certainly things that you could look at, like hires. And if you were to look at say, new hires and take the inverse of that, so 1 over M2, and then we're going to overlay the unemployment rate. You can see that, you know, I mean, normally this 1 over hires sort of leads it, right? So if it's going up, it's only a matter of time before the unemployment rate starts to go up. And it's been going up pretty aggressively, right? Hires has been dropping like a rock. So it seems like it's just a matter of time. So my view on the market is this. I just want to be clear. My view on the market is this. I think that over the next few months, Bitcoin is going to chop the altcoin market up. That's what I think. That shouldn't be news to you. That's been my view for 2 years, is that that's what's happening. And people have given me a hard time about it, but who can look at the Bitcoin dominance chart and say it was wrong, right? With a clear conscience, who can look at the dominance chart and say that was the wrong view? Dominance has been going up for a long time, despite people claiming it's not. It has been. So my view is that over the next few months, Bitcoin chops the altcoin market up. My view is that it's going to get certain types of bounces, either off the bull market support band, potentially the 100-week SMA. There's all sorts of levels that you could look at, right? But we've been talking about these levels for a while. You know, 36K, 37K, that's where the bull market support band is. You could even go back down to the high 30s and low 20s. But at some point, I think there will be a Bitcoin bounce on its USD pair. And when it bounces, that's where I think alts finally break down on their Bitcoin pairs. That's where I think Ether breaks down on its Bitcoin pair. When Bitcoin bounces, regardless of whether it takes out the prior high. It doesn't matter to me, right? Regardless. So whether it bounces at the bull market support band, whether it bounces here, whether it goes back down to this level, or whether it goes down to the 100-week SMA, which has historically been visited as well around this time of the cycle. Whatever it does, right? Whatever it does, any type of these scenarios, when the bounce occurs, if a bounce occurs, I think that is where alts break down against Bitcoin. If there is no bounce, if no bounce occurs, if everyone's waiting for this bounce that never actually happens, because perhaps instead of getting a bounce, we're just getting something like what happened last cycle, where we just go into outright capitulation. If that occurs instead, I still think dominance will go up. Because when Ether USD breaks this trend line, I think it's basically just straight back down to the bottom part of the range, right? Straight back down whenever that breaks. So those are my views. Bitcoin chops up the altcoin market for the next few months. It could bounce. It could put in a slightly lower high. It could even take out the prior high if it wants to repeat 2021. But regardless of how high it goes, Ether Bitcoin breaks down as Bitcoin dominance hits 56%. And we've explained why 56% is an important level. As Bitcoin dominance hits 56%, that's that 0.5 retracement level that we've talked about right here. And you can see that this sort of this wick right here is the same type of thing as these wicks over here. In the same band, right? Between the 0.382 and the 0.5. This is between the 0.382 and the 0.5. Same wicks, same levels. I think eventually it's going to, and you can see that after hitting these wicks, it fell below the bull market support band between the 0.236 and the 0.382. That's where we are right now. So if and when this move comes, that is where you have to be very, very careful. Furthermore, while Bitcoin USD struggled after dominance hit 56%, or after it hit the 0.5, Bitcoin dominance still went up to the 0.618. And I think, controversial as I know that it is, but I think that Bitcoin dominance can still go to the 618, which is 60%. If you were to look at Bitcoin dominance plus USDT dominance, you can see that it's actually at the same level that it was at in May of 2019, just right before rate cuts arrived, right? It's the same thing. If you add in USDC dominance, same thing, right? Look at this. It went all the way up to 64%, and then it went all the way back down to 58. Look at this, 64, back down to 58. And then look, now it's going up again, just like it did over here. And if it continues to go up, then I'm arguing, what if it just simply goes all the way back up to the top part of the range up here at 75%? This is not Bitcoin dominance. This is Bitcoin dominance plus USDC dominance plus USDT dominance. So you're accounting for there's other assets that people are going to. But I think Bitcoin dominance would also go up in such a move. The dollar is really interesting right now, because to me, this looks exactly like the Bitcoin dominance chart when it was carving out these lows. Look at it. It's almost identical to the Bitcoin dominance. Look. A low, high. A lower low, a lower high. Same thing with dollar. A low and a high, a lower low here, and then a lower high. And then a third lower low, same thing as Bitcoin dominance, and then it took out that high, right? Like it swept that high and went slightly higher, just like the dollar just did over here, right? It took out these highs and swept it and went higher. And then after all that, Bitcoin dominance came back down, put in a low, went up to the bull market support band, got rejected. The dollar is now at the bull market support band. So if it were to continue to emulate Bitcoin dominance, then it could come back down and then go up. Or it just goes straight up. So for the dollar, those are my two base cases, right? Either it just goes straight through it and we forego that last move back down by the dollar, or we get one larger pullback by the dollar near these prior lows, and then from there it goes up. Which, funny enough, if you look at the time frame on this low here to the next low, it was about 3 months or so. Here, December, right? So if you were to go out, let's say 11 weeks, that puts you in March, which is right around the time. Like, it all seems to be kind of like, no matter how you look at it, it seems like a lot of things sort of line up around that March, April, May timeframe, you know, where dominance is probably going to break up. Ether, Bitcoin will probably break down, you know, sort of in that same time frame. It might be a little bit later. It could be, you know, June or something. As rate cuts arrive, and then everyone shifts from talking about risk assets and SPY ETFs and all that stuff to then figuring out how much damage has the Fed done, and have they pushed us into a recession or not. So those are my views on the market. I hope I've communicated them well. I don't know if this is the high for Bitcoin or not. I don't. I think you can easily find reasons for it to be, considering that we just launched another product from Wall Street and that tends to mark tops. It could certainly be. One other way to view this is that, I mean, this was also the Coinbase IPO, and then eventually we actually swept that high. So that's maybe a little bit of a counter evidence. One thing that I've thought about, and this is going to get me into trouble, but I do wonder if Ether Bitcoin is at all showing us what Bitcoin USD is going to do. Because, you know, Ether Bitcoin put in a significant low, and then it rallied all the way back up. And what's interesting about that rally is that it actually rallied. I mean, it had a wick higher, but it rallied to the 0.786. And then it still came all the way back down to the prior low. If you were to go look at Bitcoin, it's already hit the 618. How many times over the last year have we said that the 618 could be tagged if it just wants to emulate exactly what it did in 2019, right? The 618. That's where I went in 2019, the 618, just before rate cuts arrived. That's more evidence to suggest that that's the top. It tagged the 618 just like it tagged it here. Okay? But if it were to emulate Ether Bitcoin and it were to go up to, say, the 0.786, which is even higher, that would be an insane move, right? That would be an insane move. That's not necessarily my base case, to be completely honest. But I've seen crazier things happen. The point is, I don't know whether this is it, whether it bounces up one last time, I don't know what it does. If you actually look really closely at 2019, what you'll see is that it went to the 618, and then after going to the 618, it went back down to the 382, and then back up to the 0.5. And there was actually a wick in here in between. But it still went to the 0.382 first. So it was 618, then 382, then 0.5. 618 was 48K. It's already gone past the 0.5. Guess where the 382 is? Guess. The 382 is exactly at the bull market support band right now. So if this drops here in the next week or so, it's hitting the 382, which is exactly where it hit it in 2019 after it came off of this high. So if we hit the 382 and if we get a bounce, 42K is going to be the big level that it has to get by. 42K. 42K is where it was rejected at back in August 2019 after it got a bounce. So what I'm saying is that if we do get this bounce and we go back up and we go to 42K, if we cannot get past 42K, then it strongly suggests that this is the local high for potentially a long time, until we get back to QE. If we can get past 42K, then you're looking at potentially coming back up and sweeping these highs, or if it wanted to emulate Ether Bitcoin, going up to the 0.786. Here's the crazy thing. Even though Ether Bitcoin went to the 0.786, it still bled back down and put in a new low. It still bled back down, put in a new low. If you look at Bitcoin, one of the things we've said before is the regression rainbow, the 2.5 log line rule. It's already been hit. I don't see why we have to hit it again. 2.5 log lines down, 1, 2, 2.5, right? Half, 1, 2. 2.5 log lines again. Where does it put it? 1, 2, half, middle of the green line. That's exactly where we peaked at last cycle, middle of the green band. 2.5 from there, half, 1, 2. It's the line that we just tagged, right? So we just tagged that line. That line right now, by the way, is at 49.4K. But when we tagged it, I mean, it's kind of crazy. Like when we tagged that line, you can see that we basically hit the regression band, right here. It came within just what, a couple $100. We went to basically 48,975. The regression band was at 49.2K. I mean, it was literally right there. So if we bounce, this would, you know, by March or April, it would correspond to like 52, right? If we don't bounce, then 29K is what's going to come into play. It's a really difficult market, and I don't have the answers. I don't claim to have all the answers. I hope that I've been helpful to people. I don't always get the sense that I am, but I do hope that it has been somewhat helpful. If you want to know like how I navigate this market amidst all this uncertainty, I do the same thing that I've been doing and saying forever. I DCA in at a low enough risk level. If the risk level is low enough, then I'll buy. If it's too high, then I sell some. That's all I do, right? I don't concern myself with the ETF stuff or the merge or whatever the newest narrative that crypto Twitter is trying to sell to you. Think about how many people a couple of weeks ago were saying that there's no way it's a sell the news event. And here we are, Bitcoin dropped 15%, right? It was a sell the news event. That doesn't mean that it can't eventually go higher, but it was a sell the news event. And just don't fall for those narratives, because those narratives, they seem like they're so convincing when people are saying that it's up only, and then a few weeks pass and you're like, oh, no, it was the same thing as it always was. It was a sell the news event. Just like every other institutional product launched into the cryptoverse forever has marked local highs. Oh, surprise, surprise, it did once again. So the 2.5 log line rule has been hit. If we were to tag it again, which you can see kind of like over here in February 2021, you can see that we would tag it, and then we just kind of kept tagging it as we kept going up. So there's I could see something like that happening, where it sort of seems like it won't give up, but really it's just tagging the same trend line. Another way to look at this, by the way, is to, let me get rid of the regression rainbow. Look at it like this, right? You can see that Bitcoin went back to this level. The same thing in 2019. You see that? Same thing. Same thing. So the most compelling view for me, if there is a Bitcoin bounce, the most compelling view for a bounce would just simply be alts still need to break down against Bitcoin. And if they haven't broken down against Bitcoin yet, then it just means there's liquidity that needs to get washed out. It needs to get rinsed out. And after that liquidity gets rinsed out, then we can get a larger drop. The question is does it get rinsed out just by Bitcoin chopping around for 3 months like it did 2019? Or does it get rinsed out by Bitcoin going back up and sweeping the high like it did in 2021? I don't know. I think there's a case to be made either way. I think that no matter what happens, Bitcoin dominance is going to go up. And even if Bitcoin were to crash, even if that happens, even if it were to drop like it did over here, 72% from the mid-cycle top, 72% drop would even put Bitcoin at a new low, right? Even if it did that, which everyone on crypto Twitter is going to say it can't happen, but even if it did, I still think Bitcoin would eventually recover, right? So that's why I still have, that's why I still have Bitcoin, even though I acknowledge it could drop a lot. But I have it because even in the case that it drops, I think the Fed will pivot. We will go back to looser monetary policy, and then Bitcoin will rise again. So this is this year right here. I think at some point we'll probably revisit this range. This is my guess. Because at some point we need to get the uninversion of the yield curve. At some point the Fed's going to pivot, and normally that's not a good thing for risk assets, especially crypto, especially coming out of yield curve inversion. I think some people say, well, risk assets do well once the Fed starts cutting. That's true as long as there's not a recession. So I think the main issue this time is that we have an inverted yield curve. Sometimes the Fed's raising rates, but we don't have an inverted yield curve, right? We have an inverted yield curve right now because policy was just nowhere near where it needed to be for so long. And I think the yield curve is telling us that something, the economy is sick and the Fed's trying to do what they need to do to get inflation to go away, but hasn't gone away yet. So I think at some point we're going to come back in here and visit this range. This is sort of the window of I don't know how high it's going to go before we get that sort of that risk off event where Ether goes back home, as I've said, and in Ether Bitcoin breaks down. And then the other thing to look at are some of these altcoins. Like if you were to look at Total 3, if Bitcoin were to get a bounce, it would certainly drag alts with it on their USD pairs. I just think they would break down on their Bitcoin pairs. I mean, even ADA, which has been relatively weak for a while. I mean, you can see that it did bounce off the bull market support band in May of 2019, 2 months before the first rate cut, but ADA Bitcoin had already topped out in April, right? So in May and June, when ADA USD was getting a bounce, it was only getting a bounce because Bitcoin was going up. It wasn't getting a bounce because it was just, fundamentally strong at the time. It was just getting a bounce because Bitcoin was going up. And it didn't bottom until way down here after rate cuts arrived, and it broke down against Bitcoin, which happened during a Bitcoin rally. So a lot of stuff to think about. I will try to provide an update to this video based on what happens over the next few weeks. The thing I will be looking at will be, is there a bounce here? If there's not a bounce there, your next bet for a bounce is probably going to be in the low 30s. And if not there, then your next bet is going to be at 28K, which is where the 100-week SMA is. If we just follow this and we're sitting on the door of capitulation right now, then I would be interested again in altcoins if something like that were to happen. But until dominance goes higher, until alt Bitcoin pairs break down, it's hard for me to get interested. And so that's where I stand on the market. Hopefully I've communicated it effectively. I don't expect to get everything right. In fact, probably most of what I said will not actually pan out in the way that I said. But I just want people to be aware of what I'm looking for to sort of signal that altcoins are durably gaining against Bitcoin. I don't even know. I mean, some people tell me that alts have been really strong against Bitcoin, but you look at Total 3 minus USDT divided by Bitcoin, I'm like, where, right? I mean, are you just looking at the last few months and saying, oh, well, hey, for at least a few months, alts have slowed the bleeding. Yeah, so what? They did over here too, and they still broke down. They still broke down. And even if you include ETH, but if they still break down, So that's what we're looking at. That's what I'm looking at. Hopefully it makes sense. We covered Bitcoin, we covered Ethereum, we covered altcoins, we covered the Fed and lowering, loosening monetary policy. We looked at the Treasury yield curve. We looked at a lot of stuff. One last thing, total market cap. It's been in this trend line, this channel for a long time. Look at these. Top, 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 bottom, bottom. This was the mid-cycle top of 2019. We've come pretty close to that trend line. We haven't actually tagged it yet. I don't know if we're going to tag it, but you can see we tagged it right there in Q3 of the bear market year. And then we tagged it again just before rate cuts. Here we tagged it in Q3 of the bear market year. I'm wondering if we tag it again just before rate cuts. We already came pretty close. And honestly, I could shift this a little bit to show it already tagging it, right? And it doesn't really look like anything changed. But if we do tag it, I wonder if we still have to tag the bottom of this channel, which, by the way, the bottom of this channel right now is still below the prior lows in terms of total market cap. It's at less than 600 billion. It's going to take until August, or it's going to take until September for this channel to reach these lows that we set back in 2022. It'll take until September. So you could always get either an example where it just goes straight back down, or it pops up and then comes back down and then continues on, or maybe it pops up and then goes all the way down and then continues on. I don't know. Those are my views. Hopefully you guys appreciate them, even though I know they're not perfect. I think we'll wrap it up. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up.